Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
Entering the stock market is a long-term journey, which is why investors look for steady growth and income from their securities. Earning regular dividends is a popular long-term approach to making money. However, rising interest rates and inflation may have an impact on dividend stocks. So that said, let's explore 3 Canadian dividend stocks to keep your eye on at the moment. The first is Dollarama. Dollarama Incorporated is a retailer operating discount stores. For the second quarter of fiscal 23, the sales growth of the company was reported at 18.2% and EBITDA also grew by 25%. Operating income, meanwhile, rose over 30% and was noted at $287 million. As of the 31st of July, the cash of Dollarama Incorporated decreased to $70.86 million compared to $71.05 million on January 30, 2022. The quarterly dividend paid by the company was noted at 0.055 Canadian cents per share, and the 3-year dividend growth was at 11.22%. Next, Algonquin Power and Utilities Corp. Algonquin Power is a distribution utility along with transmission and generation, and it's the parent company of Liberty. For the second quarter of 2022, Algonquin Power's revenue and adjusted EBITDA both increased 18%, and they were reported at $624 million and $289 million respectively compared to the second quarter of 2021. Meanwhile, adjusted net earnings rose to $109 million with an increase of 19.6% for the same comparative period. The company follows dividend cycles on a quarterly basis, and it pays 0.181 US cents per share to shareholders. The dividend yield was noted at 6.241%. Next, Northwest Healthcare Properties Real Estate Investment Trust. Northwest Healthcare Properties is engaged in providing high-quality healthcare real estate properties to its investors. For the second quarter of 2022, the revenue of Northwest Healthcare grew by 24% and was reported at $118 million as compared to the year-ago quarter. Total assets for the company also increased in the second quarter, reported at $8.1 billion against $7 billion in the fourth quarter of 2021. The earnings per share is at 1.99 and the P/E, that is price to earnings ratio, was noted at 5.4. The company pays a dividend of 0.067 Canadian cents on a monthly basis, which is next payable on November 15, 2022. Now that you're up to speed, hit that bell icon to subscribe as well. I'm Holly Shields for Kalkine Media.